This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
So the demand for this asset class, this demand for storage from consumers is increasing. And we're seeing that especially with millennials, which is now the largest generation of people in the U.S. now. And so they want to have a smaller dwelling, whether it's a house or an apartment or whatever, but they still want their toys, right? They still want their kayak and their bike, and they need a place for their holiday decorations or their, extra stuff. But they don't want to be, burdened with like a big, McMansion kind of thing. So they're using self-storage as part of their overall housing strategy.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. I like to keep my eyes open for new asset classes to invest in, and self-storage is one of them. The one thing that I'll say is that you really need to understand how these assets work in order to find any type of success doing this. So our next guest knows all about this. He has spent his early career as an accomplished corporate finance executive with over $1.2 billion of M&A and financing experience under his belt. Now, he's had a proven track record of partnering with C-level executives doing this. Now, back in 2006, he specialized in discount asset opportunities nationwide. Now, as a managing director of Belrose Storage Group, he helps investors add self-storage investments to their portfolio without taking any additional risk. Now, with all that, I'd like to welcome Tom Dunkel to the show. Tom, buddy, thanks for coming on, man.
Agostino, man, it's great to be with you. Thanks for the nice intro.
You bet. Now, guys, like what Tom has to say, you can reach him via his contact page at belrosestorategroup.com. Okay, Tom, go ahead and tell the listeners a little bit about your journey. How'd you get started in all this?
Sure, yeah. Well, as you touched on, Agostino, and thank you again for having me today. This is great. Appreciate the opportunity. So I started out in corporate America after business school, and I found myself in this great position where I was around these amazing people that were teaching me basically the deal business, mergers and acquisitions and corporate finance and debt and equity and swaps and all this other really cool stuff. So I had this amazing foundation from my corporate days, but I always knew, Augustino, in my head, like in the back of my head, like I just knew the corporate grind, climbing up that ladder. It was just not really the direction I wanted to head in. So I had a good run there in the corporate America until 2006, when I actually got fired from my corporate job. And it's kind of fun to look back at that, because it really propelled me on this new great journey, being a full-time real estate investor since 2006. But what I'd like to do during our chat today is I do have 3 charts that I'd like to share with people that'll show them why we really like self-storage, because we've been in other asset classes and we've been around the block a few times now. And my partner Joe Downs and I, we've been together over 13 years now. So we've done some cool stuff and we've made some mistakes along the way, but I've got some information to share with folks out there that I think will be helpful for them.
Excellent. Yeah, I've been fired from many, many jobs myself, and I wear it as a badge of honor. Most people would be embarrassed or ashamed. I think that if you're an entrepreneur, you've done yourself a very big disservice if you haven't been fired at least once.
That's right.
So,
yeah.
Yeah, and sometimes it's that kick in the butt that it takes to really motivate you to do something that you're supposed to do, right?
That's right.
So
that's right.
That's great. So, before we get into the charts, let's talk a little bit about self-storage as a business, because I think a lot of people, I've done some research on this business, like I said earlier, And it's not as easy as just buying a bunch of buildings or even building them. Like, it's not as easy as that. I mean, it's way, way, way different than doing multifamily. I think there's a lot of multifamily people that decide they want to do self-storage, and I think it's an easy transaction to do. And from what I've discovered, it's not. I mean, aside from, yes, there's the market dynamics, understanding how to select the asset. That's one thing, but and they're both businesses. That's another thing. But to me, it seems like you really have to understand the demographics. You have to know how to market. You have to know the technical side as well, because technology, at least these days, is a real big part in how it works. I mean, it's just a whole myriad of different things. And maybe you could talk a little bit about that.
Sure. Yeah. I mean, you gave me a lot to unpack there, but yeah, a lot of folks who are in self-storage just found themselves in the business because they had some spare land on their property and they figured, hey, this will be easy and inexpensive to throw up some units and I'll be off to the races. And so these are the exact moms and pops that we are now acquiring facilities from, because they've never been to the industry conferences. They don't know, like you touched on, the technology aspects of how self-storage is changing and evolving and growing. And they just don't ultimately, at the end of the day, run it like a business. We acquired a facility up in New York State last fall, and the owner flat out told us that he knew his rates were way below market, but he didn't want to increase them because he knows all of his customers, and he didn't want to agitate them by bumping up their rents. And he said, I'm fine with the amount of money that's coming in each month, because he was an older guy and it allowed him to, go down to Florida and spend time with his 39-year-old girlfriend and play some golf. So that was what was important to him. It was not important to him to maximize the value of that business. And that's exactly what we do here at Belrose Storage Group, is we buy these underperforming facilities and we run it like a business so we can push the value and create great returns for our investors.
Yeah, I think there's a lot of that even takes place in the multifamily space, right? Somebody owns an asset for a long period of time, and maybe it's already paid off and the rents are super low, but they're like, I mean, they bought it so long ago that it's just cash just rolling in. Yeah. So, but to your point, if you're going to run it like a business, for real, So I think, and obviously in the multifamily space, of which we have a great deal of experience doing, there's certain, I guess you could say, lower and upper limits that we're trying to find in terms of unit size, right? We're always trying to find like greater than 100 units. We're looking to get into a market to grow at least 1,000 units to begin with and then expand it out from there. I'm assuming the same sort of rules apply, because that's what I've seen anyway. The same rules apply when you're doing your types of deals, the self-storage business, right? Because the last thing you want to do is buy, say, 50 units in the middle of nowhere, right? And try to run it. It would be, to me, it sounds like a nightmare. Is that accurate?
Yeah, you're spot on. We definitely have a range of size that we're looking to buy within. We want to be below the big guys, right? We want to be below the Public Storage, Cube, Smart, Extra Space. We want to be below those guys because they just basically have free money and they can pay way more for stuff than we can. And, they're primarily in the bigger markets, right? So we've found a nice niche, beneath those folks and then above kind of the onesie twosie investors. So our typical size envelope is like 20,000 square feet up to about 50 or 60,000 square feet. Because that puts us sort of in that middle range where the big guys don't want to waste their time on that, but it's probably too big for just a onesie twosie mom and pop investor.
Yeah, I think it's great also because you're not really worried about NIMBY, not in my backyard, or anything else like that, because usually it's out in the middle of, I'm not going to say in the middle of nowhere, but it's off the beaten path where there's even a potential of building more if you have the land to do it, right? Which usually there is. Is that true?
Yeah, I wouldn't say usually. I would say those are opportunities that we look for. In fact, the facility we just closed on last week came with about 10 extra acres. So we're definitely going to be doing an expansion there. That's down in North Carolina. We're just finishing up an expansion at our facility in Lynchburg, Virginia. But, those are extra kind of value add nuggets that are just bonuses at the end of the day. We've acquired plenty of facilities that did not have expansion potential, but they definitely had a lot of turnaround potential in how the business was run.
Right. Now, I guess the big question is, how do you determine how much to add, how many units
Hmm.
to add, or how much square footage to add?
Sure.
I mean, because the thing is, though, is that I think the big dependency is there enough traffic driving through the through the corridor of wherever that asset's located, and demand has to be there, because typically self storage follows multifamily, so that means you have to have either multifamily or other some sort of, I guess, some sort of density when it comes to single family, I suppose, right? I mean, how
Hmm.
do you make all those decisions? How does that part work? Do you do it on your
Sure.
own, or do you have an outside group, or what?
Yeah, yeah, great question. We spend a lot of time analyzing the market where the asset is sitting that we're targeting, and we're looking at all those things, those demographics. We like to see that the income uh, that's high enough, but not too high. If the income's too high, they're probably buying bigger houses and they have storage opportunities at their own residence, but and then we're also looking at things like poverty and crime statistics, those kinds of things. We're looking at housing starts. We want to see that there's investments being made in that particular community. We want to see that the population is steady or preferably growing, but we don't want it to grow too fast. We're kind of this Goldilocks situation. Because if it's growing too fast, that's when like the big guys, the public storage and those big guys are going to come in and build some 150,000 square foot class A shiny brand new facility, and they're going to suck up a lot of the demand in that market. So we're trying to find that Goldilocks situation where it's growing but it's not growing too fast. The income's there but not too much. But we do spend a ton of time on that up front, and we do have specialized resources that we use to do that. So we have a couple of very expensive subscription databases that we subscribe to specifically for self storage. So they have the data in there that can help us map out our 1, 3, and 5 mile competitors and how much they're charging and what's their occupancy. And as we go down that due diligence path, we don't strictly rely on those resources because we'll compare one with the other, and sometimes they're close, sometimes they're a little off from each other. But as we get down that due diligence path, we're ultimately picking up the phone and we're calling those competitors to find out, like, hey, what's your occupancy? What are your, what's your rates, and what's your rate trend? Is it going up? Is it going down? And that sort of thing. So we spend a ton of time on that, and a ton of time and energy. We have a whole team here internally at Belrose Storage Group on the acquisitions end, including offshore VAs, virtual assistants, and internal, U.S. based virtual assistants, plus our internal team. So it's a whole big process. We're not just out there picking up any facility that we can get our hands on.
Right. Well, because I think to your point, if I heard you right, that whole Goldilocks effect there, even if you did buy an asset in a fast growing market,
Yeah,
one of these big box guys can still come in. If the land's available, they'll pick it up and
sure.
they'll beat the hell out of you. I imagine, right? Is that a thing
Oh
or
yeah.
what?
Oh, for sure. Yeah. When they do come in, and we do have facilities and markets where there are big guys in there, and yeah, when things start to slow down or things get a little, yeah, here in post-COVID world, like we talked about before we hit record, we're back to a seasonality in self storage, and when we get into the slower months, those big guys are slashing their rental rates. And it's not unexpected, but it certainly is something that we have to adapt to.
Right. Well, and the thing is, though, is that by slashing the rental rates, they're getting people in the door. I've seen the ads too. They'll say like the first 2, 3, 4 months, whatever, are totally free,
Mhm.
because they know that self storage is extremely sticky. Right. If people stay
That's
in
right.
there, like they stay in there for a long time. Right. Like how long do you usually stick around for, those tenants
That's right.
or those
Yeah. So
users?
it's a great question, Augustine. So the customer will come in and they'll say, oh, I just need a unit for, 2, 3 months or whatever. Well, 18, 24 months later, they're still there. So, and it's not unusual for a customer to be there for multiple years.
Yeah.
We've acquired facilities before where we're looking back in the customer, history, and they've been there for 10, 12, 15 years.
Yeah. And the cool thing about it, though, is that there's no tenants, toilets, or termites. That's probably the best thing. You don't have to worry.
That's
You're
right.
not wrestling. You're not wrestling with tenants trying to squat in the unit without paying rent or anything else like that. It is a
100%.
trade-off. It's very, very
Sure.
different than multifamily, right? You still get the real estate, you still get the depreciation, you still get the appreciation, you still get all the regular stuff you do with real estate.
That's right.
But like to your point though, it's a very different acquisition setup to buy these two very different assets, right?
That's right. Yeah. So, I mean, speaking about the the delinquency aspect and the auctioning off, that aspect is so much easier in self-storage. I mean, I'm a big fan of multifamily. I've actually been a passive investor in multifamily deals for 10 years now, since 2013. But one of the big advantages for self-storage is it's lien law. It's not landlord-tenant law. So day 61, tenant gets, if they haven't paid, their tenant gets a notice, and we're selling their stuff, and unless they come and true up their bill in the next, I think we give them 10 days. So then we just put the stuff, we take some photos of what's in the unit, throw it up on an auction website. People out there, it's like virtual Storage Wars. It's, Storage Wars, the show, is strictly made for television, people. Come on, you know that. But now everything is online. And so people buy it, and then they're responsible for coming and cleaning out the unit. Wouldn't that be great in multifamily if someone had to, come and, clean out and turn over the unit for you to rent out. So a lot of times we can have a unit emptied in the morning, and then it can be rented up that afternoon.
Yeah, that's crazy. That's probably one of the better things. However, I would venture to guess, and correct me if I'm wrong, that the upside is totally different though, right? I mean, the upside is similar to, so we do net lease assets as well. So we have a business that also acquires single tenant net lease. And it's great. Those assets are great because it's a monthly steady return. It's very, very predictable. It's great. However, the juice is not the same. We don't get the same juice as you would in a multifamily, right? So is that the same thing when it comes to self-storage?
Yeah, I think if I had to say the difference there is really just scale, right? Because I think there's plenty of multifamily buildings, multifamily complexes you can buy out there for, 20, 30, 50 million, maybe more, right? That same scale of property isn't readily available in self-storage. So our deals are generally smaller, but there's certainly plenty of juice there as far as returns go. We're targeting our investor returns in the mid to high teens, and to this point, we've had 3 exits. They've all far exceeded our target expectations, so that's awesome. But yeah, so our scale is just a little lower, but our cash flow is super strong. I would say that's another big difference between self-storage and multifamily. Is multifamily, right? You're because it is a bigger property, right? Your net operating income margin is probably 30-35% in that ballpark. Self-storage, our operating margin is in the 50, 60, 70% range. And so that leaves plenty of cash flow left over to cover our debt service and then pay a nice dividend to our investors. So.
Nice. So lenders, I imagine, really like these types of assets. Then it sounds like they'd like it even more so than multifamily.
They might, but again, there are scale issues there as well, right? I mean, in multifamily, lenders love to write those big checks, right? The life companies and whatever. On our end of the scale, at least for the niche where we play in the 20 to call it 60,000 square foot self-storage range, our typical loan might be 3, 4, maybe 5 million. So a lot of lenders, that's too small for them to pick up their pencil. So so we still get great execution. Don't get me wrong on that. It's just different.
Oh, it's the same thing with the net lease, right? We're usually working with small community banks or small community credit unions to do those deals. Yep. And we get some pretty decent terms. I mean, you're talking 75, 80% leverage even today with interest rates in the mid 5s, which isn't bad, but
Nice.
if they know that there's a corporate guarantee backing up the asset and it's backed up by a fund, we use a fund to acquire the assets. So we're within one fund, we're buying, 10, 15 stores or locations of a certain, usually it's publicly traded, but some sort of corporate backed deal. But your guys are doing actual syndication for each one, I think, right?
That's correct. Yeah, we have a syndication model, so we're deal by deal. Our investors, know exactly what they're investing in, and so we just like it at the stage of development of our company right now. I could see us potentially doing a fund a little bit down the road, but for right now, we like how that aligns our interests very, very well with the investors.
Yeah, for sure. So I didn't mention those charts earlier. Do those does that go into selecting go-to markets or whatever, or what?
No, really, it's about our investment thesis. Why we like self-storage.
All right. Well, so we have we also put this on video, obviously. So we have a channel on YouTube and on audio as well. So I don't know how you're going to share that for the audio folks.
Yeah, sorry. Well, we'll just have to go to YouTube. That's all.
Go to YouTube. There we go. There we go. Yeah.
Exactly.
What do you have?
So in three quick charts, I'm going to show you why we really love self-storage. So, and I hope these come across so well. And Augustina, because you've been such a great interviewer, I'm going to throw in a fourth chart, which it'll just allow us to have a little bit of fun. That's all.
All right.
So this first chart is, I'll just show it to you right here. I don't know if that's coming across very well, but that up and down scary red line, that's the U.S. economy for the last 40 years, right? That slow, gentle, meandering. Have you ever been on the lazy river at a resort, Augustina?
No, but I've seen them.
You got to get out more often, man.
I don't have time for that, man.
But it's just a nice, cozy line, that green line. That is self-storage occupancy. For the past 40 years. So in up times, down times, in between times, self-storage remains occupied. Now, look, it's not to say that rates don't adjust during that time, but people need storage in good times because they're buying stuff that they need to store because we're Americans, right? We overdo it, right?
Like to buy things. And I'll tell you what, though. So describe it for those listening. Okay.
Yeah.
Basically, it just shows that where those dipping lines go is where the economy tanks. Basically, there's an economic slowdown. Yeah. Self-storage, and more recently, anyway, it appears as though self-storage actually went up. Is what it looked like.
That's right. Mm-hmm.
But it's similar to multifamily in the case that when the economy slows down, people usually start, moving back in with family, moving back in with friends, roommates, that kind of thing. 100%. Same thing goes with storage. Now you got to put all this extra stuff somewhere else. And like you just started talking about here, Americans are really, really bad at buying a bunch of crap they don't need. They're really good at it.
That's right. Yeah. So in good times and bad times, that's why self-storage is very, very recession resistant, I would say.
Yeah.
And you just touched on a second ago, Agostina, the crux of this next chart, which this shows market penetration in self-storage. So over the last few years, so it used to run around like 8.5%, 9% of households in the country were using self-storage. Now you can see that the popularity, the market penetration of self-storage is increasing. It's up to about 10.5%. And, all projections are indicating it's going to be even increasing from there. Now, I know, look, a 1% or a 2% increase might not sound like a lot, but if you consider that there's 120 million households in the U.S., every 1% move means 1.2 million new self-storage customers. So that's a lot of storage units, especially when you consider there's only 55,000 self-storage facilities in the country, and they're not really building them all that fast. They're definitely being built. There's definitely new inventory coming online, but kind of like in housing, it's not keeping up with the demand.
Right. Like we said a second ago, it does follow housing. And what's also interesting is that growth that you just described, there's growth in other countries as well, but America is very unique in that when it comes to self-storage, that whole concept is I mean, in Canada, I've only ever seen like one or two self-storage businesses there, right? In entire, like in the places I've been. I'm from Canada. In Colombia, there's no such thing. Like you can't even find those types of businesses. So America is very, very uniquely positioned for this type of growth that you just described here a second ago.
Right.
It's remarkable.
Yeah. Very interesting. So the demand for this asset class, this demand for storage from consumers is increasing, and we're seeing that especially with millennials, which is now the largest generation of people in the U.S. now, and so they want to have a smaller dwelling, whether it's a house or an apartment or whatever, but they still want their toys, right? They still want their kayak and their bike, and they need a place for their holiday decorations or their extra stuff. But they don't want to be, burdened with like a big, McMansion kind of thing. So they're using self-storage as part of their overall housing strategy. So that's exciting.
That's right.
So the third chart here, we alluded to earlier about how self-storage is very safe. Now, this is just showing the delinquency and default rates of different asset classes. So you can see the highest defaulting and the highest delinquency is in retail. Then it goes down to lodging. Then it goes to office, then multifamily, then industrial, and then self-storage doesn't even register on this chart because of what we talked about earlier. The cash flow of self-storage facilities is so good that even if there is a need to respond to the market and lower rates, there's still enough cash coming in so that the debt can be serviced. So we really like that from a capital preservation standpoint when we're sharing these opportunities with our investors. Make sure to know hey, this is a hard asset, and these self-storage facilities, they just don't default, which is a nice, warm, fuzzy, comforting thing for an equity investor.
It is funny, right? People will pay all kinds of money to keep crap in a garage that they don't even use. It's just hilarious. So in that chart, you had retail. So what sort of retail is that? Is that like corporate backed, lease guaranteed retail, or is that anybody is like JoJo's hair salon or whatever?
Yeah, it's a good question. I didn't dig into the details of the what's making up that chart, but I suspect it's just broadly defined retail, probably including the little salon and all the way up to the big credit tenants.
Yeah, exactly. I mean, because I know malls for some time had some problems. Strip centers have some problems, especially when there's independent retailers in there. Yeah. That if they don't have the backing of some big corporation or a big publicly traded company backing them up, they're going to run into issues when there's a slowdown. Meanwhile, we had during COVID, and you mentioned it earlier, everything ran fine with the big boys. The Walmarts and Targets and Dollar Generals, all those guys. They didn't even know. As a matter of fact, all their sales went up because everybody just sitting at home. So not crazy.
Yeah, I mean that's more up your alley than mine. I'm sure you're way more knowledgeable about the retail world than me. But that's why I asked.
About right. that's why I asked.
No, it sounds about right. Good.
Cool.
And then if you'll indulge me, one more chart, we can maybe have a little fun with this one. So, we talked about how technology is having a real impact on the self-storage industry, and that's one of the huge value-add strategies that Belrose Storage Group brings to the facilities that we acquire. So, if you want to have some fun, you can scan this QR code right here, and you can rent a unit right from your smartphone at our White Marsh, Maryland self-storage facility. So if you go ahead and scan this, it'll take you to our management software system, and you can go ahead and fill out your all of your documents electronically. You can sign it with your finger. You can enter in your credit card information, puts you on auto pay, so it becomes kind of like a Planet Fitness membership where it's more of a pain in the butt to cancel it than to just keep it going for another month. But technology like that, so that's a sign that is on the gate at all of our facilities. And the reason is we don't have a manager on our facilities all day, every day, because most of them are are very highly occupied. So what is the manager going to do? So that's one of the ways we're able to reduce our expenses is by leveraging technology like that. So if someone drives by a facility, they can scan that QR code, whether there's a manager on site that day or not, and they can take care of business right from their smartphone. They get a text message with their gate code. They can punch it in right there. Gate opens up. They go to their unit, roll up the door, throw their stuff in there. There's a lock in there waiting for them, and they can lock it up and be on their way without having to interact at all with a human. So,
Yeah,
so that was
that's one of my
huge during
favorite
COVID.
things.
Yeah, that was huge during COVID, and it's just something that a mom and pop facility owner just would never want to undertake.
Right. Now, could they still talk to somebody, like call into a call center if they have
Yes.
questions? Because I appreciate that technology, but I can picture someone scanning it in, and before they enter the credit card number, is there a real human behind this? I want to know. Like, so they'll call an 800 number or something like that, right?
100%. Yeah. So on the fence as well, on the gate as well, is the phone number for the facility. So if they call that number, it's going to ring on the cell phone of the manager that we have assigned to that facility. But and so they'll be able to handle whatever question, issue, problem, what have you, one-on-one with the customer. But that manager, they might not be in White Marsh, Maryland. They might be in Macon, North Carolina. But because again, technology, it doesn't really matter exactly where they are, because the manager can run the management software from their smartphone as well. So they can interact that way and take payments and all kinds of cool stuff to make sure there's still that personal interaction if the customer so desires.
Yeah, that's one of the things I love most about this line of business, is because, again, you can literally scan the QR code, go to the unit, the lock will unlock automatically, or with their phone or something like that. It's electronic lock. Dump all their stuff in there and bounce, and they're done. That's it.
Exactly.
So that's the beautiful thing about that business. Yeah, love that business. So, but like you said earlier, it's not exactly an easy thing. You have to throw a lot of resources to try to identify the right markets.
That's right.
And to really figure out what to buy, because it is still very, very competitive. It's still very competitive.
Absolutely.
So, what would you say are some of the latest, I guess, market trends to watch out for that's going to impact the self-storage business?
Yeah, great question. So, of course, traditional self-storage, whether it's climate controlled or non-climate controlled, as I showed you in the chart earlier, that market penetration is still ticking up. So that there's that demand for the traditional storage. But there's two areas kind of adjacent to the self-storage that are really exciting and we're paying attention to here at Belrose Storage Group. One is commercial storage. So one of the things that happened to a bunch of contractors during COVID was they really got crushed because of the supply chain issues that they ran into. They weren't able to get the materials and the products and all that stuff that they needed to complete their jobs. So a lot of them now are instead of relying on that, kind of just-in-time inventory delivery, they are renting larger storage units. So instead of like a 10 by 10, which would be like a normal consumer size unit, they're renting like 15 by 30s or 20 by 40s, and they're storing their truck in there, or their ladders, or their materials that they weren't able to get during COVID. And so it's smaller than like a flex space, but it's bigger than like a consumer unit. So these smaller contractors can have a place where they know that their stuff is going to be secure and they got their materials they need to do their job. So we're really focusing in on that as a growth area within the storage industry. And then the other one is RV and boat storage. There's tons of RVs being built every year. I think it's over 500,000 RVs are being built every year. But there's not enough parking spaces for these RVs and these boats. A lot of homeowners associations, they do not allow for RVs or boats to be kept at the house, in the driveway or in the yard or whatever. So these people are buying these RVs and these boats. They need a place to put them. And obviously, it doesn't cost much to buy a piece of land and, get it fenced or whatever. We're actually here at Belrose Storage Group, we're looking at kind of the high end of that industry. So there are executive RV and boat storage facilities that are enclosed. They have electricity, they have dump stations, they have water, they have other amenities, so that these expensive RV, right? I mean, people are spending $300,000-$500,000 on an RV, and so they want to make sure that it's being well taken care of and it's in a nice, safe, secure place. So those kinds of opportunities are popping up as well. And that industry is really wide open. There's just not a lot of competition. There's not a lot of there's no big player there. There's a couple of larger ones, but it's really, really early in the curve of that developing industry.
Yeah. No, just all great things. I mean, I think the first thing is especially interesting in terms of where to store materials. I mean, ever since the whole COVID thing, there's been supply chain issues everywhere, right? Mm-hmm. It's been nuts. So a lot of folks, just like you said, they're resorting to storing materials at bigger industrial spots, but getting access to that is a pain. Getting, as opposed to what you're doing, sure, it's going to probably be a little more expensive on a per square foot basis. However, if it's something get in, get out fairly quickly for a quick job, it may make sense to do it. So
that's right.
It's a great feature to offer. Yeah, great feature.
And you got to guess, right, that tenant, if they have their truck in there, their expensive materials or tools or what, they're going to be paying their bill.
Yes, they will. Right? Yes, they will. Yes, they will.
It's a little insurance policy, so you don't lose it.
Yeah, and as the economy keeps going down, crumbling a little bit here, theft and crime tends to go up a little bit. I mean, it's not a universal fact, but we do find there's numbers that support the fact that whenever there's an economic downturn, crime goes up. Why? Because people get a little more desperate and start doing things they probably shouldn't be doing. Storing their materials and storing their vehicles and such is probably a good idea. Yeah, absolutely. Mm-hmm. All right, Tom, well, we covered a lot of stuff here today. For someone listening right now, what sort of bulletproof advice would you have to offer them if they're thinking about doing the whole self-storage thing?
Sure. Well, whether it's self-storage or multifamily or whatever asset class, you're looking to get into. I mean, this book over my left shoulder here, Who Not How, I mean, has been a great resource for us here at Belrose Storage Group. And just the crux of the book is, hey, when you run into a problem or you run into an obstacle and you're just not sure how to get around it, get through it, overcome it, whatever, as entrepreneurs, right? A lot of times, we think about, well, what do I have to do? I'm going to smash through that wall. I'm going to make it happen. If you find a right person that maybe has experience in that area, they're going to be able to, they've probably already solved that problem. Or if they haven't, they know a better way than you do. So I think it's important to surround yourself with the right people that know how to solve business problems. They've looked at these asset classes before. You can really get up the learning curve a heck of a lot faster if you're surrounding yourself with the right people who already have the answers to the questions that you have and the questions that you don't even know you have yet.
Love it. Well, guys, all right. If you want to reach out to Tom, reach him at his website at belrosestorategroup.com. Hope you got some insight on the storage business. Great business. I really do like it a lot. But remember, it does take a great deal of skill and knowledge to learn how to do it. If you do want to invest in it, which is probably the better way to do it, reach out to Tom. He can certainly help you with that. Thanks for tuning in. See you the next time.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.